Welcome everybody to AIB Radio, County Assemblies, Jean Blaine and Maria Janet on this 16th day of April 2011. On your screen, you should see Jean's desktop. Take it away, Jean.
Okay, before we start, I want to reiterate something. This is very important because it's causing delays in you getting registered. If you don't have a PayPal account, you need to send the money to me. I'll give you the address to send it to, so write it down. It's 3051 Los, L-O-S, Robles, R-O-B-L-E-S, Road. That's 1,000 Oaks, California, 91362 is the zip. Do not send any checks or money orders to Maria, because if you do that, you're not registered. You got to send the money to me. Don't send it to Maria. We've told everybody this at least 2 or 3 times that people keep sending checks and money orders to Maria. That causes a delay, a 1-week delay in getting registered.
Well,
don't do that.
Most of the people, Jean, when they get the information letter from me on what to do and how to do it, at the very top of the letter is blue links that gives you the webinar link for each and every class that we've held. You go to the current class, and that's how you register. If you send a payment to Jean, or I don't get notification of it, and you don't get the link to register with webinar, we had 13 people this week that were registered but could not get approved because they were not verified that payment had been made. If you make a payment and you do not register also with the webinar, with the link, I can't approve you to attend the webinar. So most of you people are sending me emails asking me questions. Do not ask me the questions. Jean is the presenter. Ask those questions on the question box. Now, Jean, those people that don't have PayPal, they have a money order, they still send it to you.
Send it to me at 30.
Send me a copy of your mailing receipt and your money order so that you can get properly credited on my list. I'm the one that approves everybody to get on the call. Some of you people I've had to email 4, 5, and 6 times with the same question that's all covered on the information letter. All you have to do is read it. And it will tell you if you have technical difficulties with getting the webinar recordings, then we will deal with transfer big files. If you have problems getting on the webinars, that is webinar.com until next week. We will have a new company called Wowee that has a better platform and is easier to use. So make sure that you don't inundate me with all these emails, because I have to keep sending and sending and sending, asking the same question. Are you registered? Did you make your payment? It takes one email to tell me, yes, I registered, and here is my receipt for my payment. I should not receive more than one email from each of our students. We really appreciate your attendance, but have a little consideration for me, because I'm spending 8 to 20 to 30 hours chasing my tail, trying to validate payments and registrations through 3 different mediums. And I get all mixed up and messed up, and I try to do it the best I can when it only takes one email to get marked that you are paid and registered. Go ahead, Jean.
You have to register before Friday is the last day. Do not wait until Saturday to make your payment, because a lot of times, even if you pay it to PayPal, I won't get the email right away, and Maria doesn't get it right away, so you won't get registered in time to attend the class. So don't wait until Saturday to register or to make payment. Do it on Thursday, the day before Friday. Friday is the last day for registering. Everybody should be registered by Friday at the latest.
With their payment verifications.
Okay, is there any questions? If you don't understand something, now is the time to ask, because it's causing unnecessary delays in getting registered and getting into the class.
Okay, Jean, we're still 5 minutes out from starting the webinar. We're a little bit early. So I have some messages here. It's not 6 yet. It's only 5:53. So you can just do some general discussions for another 6 minutes. Let's see. Let's go through some of these. I'm going to traffic court on Monday. Can we spend a few moments discussing adverse claims so I can feel good about the proceedings?
If you're going into traffic courts, you don't need to do an adverse claim. You need to challenge jurisdiction.
Explain that a little bit early. These are just general questions, and we won't start the class until 6.
Well, if you're going to traffic court, that means that you signed a traffic ticket. Now, if you want to just go ahead and pay it, we're going to go into that tonight, because we're getting a lot of questions about zeroing your account and about redemption. And we're going to go into why you can do this. This is not some off the wall. I've got one of my students has paid off all his mortgages, all his credit cards. They zeroed out the account by following my instructions on what to do. You can pay all your utility bills, your gas, your electric, your water, your trash, your garbage, whatever utility bill you have. You can pay it with this method. But you have to understand what you're doing so you do it correctly. And you got to file the proper documents when you do it. We're going to go over that tonight, because everybody wants to pay their bills, and I'm going to show you how to do it. I went over this in Toby's class.
Okay.
Toby's, we're working with an attorney, with Mitchell Stein, who's an attorney. They're suing 4,000. They got 4,000 plaintiffs in a class action lawsuit.
Okay, next question. They don't ask us to sign traffic tickets anymore in Washington.
Well, you already have a contract with them if you have a license.
Okay.
That's why you don't. If you got a license, you got to obey the law. So there's two ways to approach this. You go in there and you go into traffic court. When you go in there, or you can find out how much it is and send the ticket in, and we'll go over how to do that.
Okay, then we're going to do that tonight.
We're going to do that tonight.
Do we need a UCC1 in place to zero the account?
Yes, I recommend you do a UCC1, but you got to do it.
Are there examples for a proper UCC1 to be able to do the money order?
Yes, I have a UCC1. I know how to do them. Then
we need to have a part of the documents for next week will be a proper UCC1.
I'll show you how to. I'll give you an example. We'll give you an example of a properly done UCC1.
Okay.
It's the security agreement that gives you the security interest, not the UCC1. You got to have an indemnity bond and you got to have a fidelity bond. And you got to list all your collateral in there that you want to collateralize.
some of us did pretty extensive security agreements with UCC ones years ago.
I haven't seen one yet that's been done right.
Okay, so we'll get an example and you'll be able to pull your UCC one and see if you need to amend it with a UCC 3.
I'll give you an example of one.
Okay.
I'll give you the security agreement with the UCC one on it.
All right. IRS Form 709 and how it ties to the taxable credit table.
That's a gift tax return. That's what you should be filing. I was in a bar drinking beer and eating dinner. There was a gentleman sitting next to me talking to his girlfriend. And he tells his girlfriend that he's got to pay all his taxes next week. And he was really distressed about that. Well, I came to find out. I asked him a question. I said, do you file a 1040 tax return? And he says, no. And I said, well, do you have income? And he says, yes. And I said, do you know what a 1040 tax is? And he says, no. I said, well, why are you filing a 1040 form if you don't know what a 1040 tax is? I came to find out he's an IRS agent, and he doesn't even know what a 1040 is, a 1040 tax.
Okay. Can you do a FDCPA or FCRA action in federal court totally?
Yes.
Separate from a foreclosure action?
Yes, you can.
If you are in bankruptcy court, can you do it outside the bankruptcy court on a separate action?
Yes.
Okay. Please ask about the red ink signature.
All of you are familiar with The Matrix, the movie The Matrix. If you take the red pill, it opens up all the avenues for redemption. If you take the blue pill, you go down the rabbit trails and rabbit holes. The red pill represents red ink. The blue pill represents blue ink. That's the signature of a dead man. And for those of you that don't have the redemption manual, America's Bulletin has a new redemption manual. It's 4.5. And Dorothy and the Wizard of Oz, he goes in that. It's a good treatise. He's correct on what he's saying.
Okay, so on 3/5/11, you offered a 127-page document. Has that been getting out yet?
127 pages on you mean on Title 26?
I'm not sure. It's just saying that you said.
Yeah, I'll put that up. That's on 6041. That's on public debt instruments, which is what we're going to go into. Okay. We're going to go into Title 26, Section 1275, which defines what a public debt instrument is. You shouldn't be filing OIDs if you don't know what a public debt instrument is. Everything that you use to pay with is a public debt instrument. Checks are public debt instruments.
Okay.
Money orders are public debt instruments. Checks are. Personal checks. Drafts are public debt instruments. Bills of exchange are public debt instruments.
Okay. What was
letters of credit, because they're evidence of indebtedness. We're going to go into that. In fact, now is a good time, since we're talking about that, I'm going to open this up so you can see for yourself. And you can read this. This defines what a public debt instrument is. Can you see that?
I see it. Other definitions and special rules?
Yeah. This is Title 26, Section 1275.
Okay.
Read what a debt instrument is.
except as provided in subparagraph B, and that's under definitions, debt instrument, A, general. The term debt instrument means a bond, debenture, note, or certificate or other evidence of indebtedness.
Okay, aren't all commercial paper evidence of indebtedness? Isn't a check a paid to the order of?
Yes.
Okay, isn't that evidence that that money is owed to somebody?
Well, yeah, from the person writing the check.
Okay, so that's evidence of indebtedness. So that's a public debt instrument. That can be put on an OID, original issue discount.
Okay.
Go ahead, finish reading it.
The exception. You want me to read the exception?
Well, it talks about an annuity contract. Yeah, you can read that. Go ahead.
Exception for certain annuity contracts. The term debt instrument shall not include any annuity contract to which Section 72 applies and which depends in whole or in substantial part on the life expectancy of one or more individuals, or as is issued by an insurance company subject to tax under subchapter L, or by an entity described in Section 501C and exempt from tax under Section 501A, which would be subject to tax under subchapter L were it in a transaction in which there is no consideration other than cash or another annuity contract meeting the requirements of this clause, or pursuant to the exercise of an election under an insurance contract by a beneficiary thereof on the death of the insured party under such contract, or in a transaction involving a qualified pension or employer benefit plan. Now put that in kindergarten language.
Well, that means that a 501c3 is a nonprofit or a charitable trust.
That's all your churches.
That's all your churches. And they're using your exclusion or unified tax credit to qualify as a nonprofit.
Right, but they're not qualifying as a nonprofit collector when they don't take everything that they take in and put it in a trust, and then they pay the taxes on it.
Yeah, but they're using your exclusion because you're not using it.
Okay, so a lot of people ask me, I've told the court, I've told the judge, I've told the cop, I've told the bank, I've told the attorney, I'm the living beneficiary, and they still keep coming after me.
What are they coming after you for?
Foreclosures, contempt and not paying child support, traffic tickets, contract issues, non-payment of property taxes, all kinds of issues.
Okay, well we're going to go into that. We're addressing that right now. But you got to know how to do this stuff before you go out there and start doing it. So that's why we're defining what a public debt instrument is. If they send you a bill, that's evidence of indebtedness. They're claiming that you owe them money. That's evidence of indebtedness. That's a public debt instrument.
Well, that's what we're saying, is that even though you stand up and say, I'm the holder in due course, I'm the source of the funds, and I'm not dead, they continue to come after you.
Well, you got to file the proper documents.
Okay, that's what we're going into now.
That's what we're going into.
Okay.
You can't just say that. You got to do it.
I see. Okay, so we're not filing the proper forms where they need to be to the proper entities or people that need to receive them.
And that's why I'm going over this stuff, so that you'll understand what is a public debt instrument.
Okay.
You need to write this down. You need to go in there and read this. I'm going to put this up there so you can read it.
Okay, while you're doing that, the next question is, will you show us the IRS case where the donee pays the tax?
Yes, that's in that memorandum. If they only pay it if you write them a directive telling them to pay it.
And that's in the memorandum tonight?
Yes, that's in that memorandum, yes.
Okay, so we'll cover that in the memorandum. How about state taxes? It's all in there too.
State taxes, the same thing.
What if your license is suspended or revoked? Is there still a contract? Or expired?
No. Tell them that. Ask them if they have a claim against you. They don't have a claim against you. They have a claim against your estate. Well, ask them if they paid the tax.
Okay. That's interesting because they pull all these people over with suspended or revoked licenses, or even some of us that have had an expired license and we never renewed it. And they still claimed a traffic infraction, and then they go in and then suspend the license, suspend an expired license, and then they keep hauling you to jail.
Who is the license issued to? It's issued to your estate.
I see.
It's not issued to you.
But they keep putting your butt in jail for it, though.
Well, that's because you go in there and contract with them. Don't go in there and contract with them.
Gene,
ask them if they have a claim against you.
Right, Gene. It doesn't work that way. I just got my butt hauled to jail a month ago. And I didn't go to court on the last traffic thing. And I even sent the court the letter from the doctor that said I didn't need a seatbelt medically. And they suspended the license, and that's what they took me to jail on. So you can't go and not show up. This is what people are asking. How do you do this stuff? If you go and show up, you get hung. If you don't go and don't show up, you get hung. They do all their paperwork, whether it's right, wrong, or otherwise, and then they got their goons hauling your ass to jail every other minute.
You need to do a letter rogatory to the court. And I got rid of Toby's mortgage loan, car loan. He never went into court. I wrote the judge a letter on the private side, but you got to give the judge, you got to get it served on the private side of the court.
Yes.
And people go in there, they get a process server, they go in there and they serve it on the judge takes it over and files it with the clerk. You got to tell them not to file it with the court.
Yes.
Give them instructions not to file it with the court.
Okay.
You want to stay on the private side, not the public side.
What paper or form do you use to revoke your driver's license from the state?
I don't know. You have to contact the DMV.
All right.
Tell them you want to revoke your license.
Okay.
You know what they told me that I got arrested? I went through this. I got arrested so many times. I had a zebra suit on. I got arrested. I used to get arrested 5 times a week for not having a license. And so I called up the attorneys for the DMV, and I said, where do you get the authority to order me to get a license? And he said, we own the highways. I said, oh, is that right? So I went down to the Department of Transportation, and I got the deed of trust for that stretch of highway from the original people that owned it. What they did is they granted the state a right-of-way to build a public thoroughfare for transportation purposes. This was filed with the Department of Transportation, DOT. I took that into court. You know who was in the courtroom? The Secret Service and the FBI were in the courtroom on a traffic ticket. Because I went in there and challenged. I said, you don't own this damn highway. I challenged their ownership. So you think the license is a privilege. Well, it's only a privilege if they own the highway. They don't own the highway. They don't, just like they're doing on these mortgage cases. Aren't they saying that they own the mortgage? They
Right.
own the loan documents?
Right, and they don't because they haven't qualified as a collector on it.
Right. They haven't qualified as, it's not a qualified mortgage, and they never transferred the loan documents to the REMIC to get the election.
Right.
Well, I can prove that. Toby went in there and told the judge this, and they almost jumped out the window.
Okay, folks, there was documentation that was sent out for tonight's class and documentation for last week. Why am I getting a question? Did we forget it? It went out to everybody that was registered and done.
You need to register so that we know who's registered. Don't send us, I get emails with some company name on there. Do not use a fictitious name and do not use a company name because I don't know who that is. I need your name. I need to know who the person is. The natural person. The real person.
Okay,
Don't use company names. I get these people with fictitious names, and I have no idea who that is.
we get that all. How can we get CUSIP numbers?
There is a website that has all the CUSIP numbers on it.
Are you gonna?
You can get the CUSIP number if you have your Social Security number. You can get the CUSIP number.
Yeah, but they're asking who do you contact to get that. So I put that on my list. We'll have it next week. The link or the whoever the company is.
Well, let's get this done. We're jumping all around here. Let's stay on point here. We're dealing with public debt instruments. And everything that you use as commercial paper is a public debt instrument. And that's defined in 1275 under other definitions. So everything you use for payment is a public debt instrument. And that's reportable on a 1099 OID.
So if you go out and spend $300 a month, now it's a week, on gas, and you keep your receipts, those are the ones you list on the OID.
Yeah, you put whatever you used, whatever form of payment. What did you use as payment? Did you use a credit card?
Federal Reserve.
Did you use a check?
Yeah.
You can report that as a withdrawal.
Do you have to attach all the receipts and canceled checks and money orders and whatnot to that?
Yeah, I would, yeah. You should have a record if you have an accounting, like on credit card transactions, they have a sheet that they prints out. It shows where all the payments were made, where the withdrawals were made.
What about people that use the Federal Reserve notes, and we call it cash?
Same thing. It's a public debt instrument.
So then, you don't have to send in the original receipts? Can you just make a copy of them and send them in? Okay.
Just send in a copy.
Okay.
They sent me a judgment for $80,000. I endorsed it for payment, filed it paid the court, and never heard from them again. $80,000.
And what did you exactly send in?
I did a payment order, but I did it in red ink, not blue ink. If you sign that in blue ink, it's worthless.
Where is that located in the manual? What page?
We'll find it. Just take my word for it.
Okay.
That's what the matrix is all. You're going into the matrix. That's why you're not getting anywhere in the courtroom. You keep playing you go in there as a dead person and expect to get some kind of a remedy. You can't do that. I've told people this 100 times if I've told them once. You can't sign anything in blue ink. Red ink.
Yeah, and what do you do with the judge and the attorney that walks right over that?
They don't walk over mine. You're not doing it right if they're walking over it.
Well, that needs to be clarified because that's what I'm getting emails and information on that.
Well, that's what we're going over right now.
Okay.
That's what we're going over. Okay, we're going to go into everybody should have a copy of this, zeroing your account. Okay, this is study material. Okay, read what it says. Go to number 1. Start with there.
Number 1 equals taxes. Taxes supersede contract law because of your...
Say that again.
Taxes supersede contract law. Because of
Doesn't 3713 of Title 31 say that?
3713 of Title 31
says that.
Okay. Because of your Treasury Direct account, which is your Social Security number, due to the bankruptcy.
Your Treasury Direct account is that red number. Notice it's written in red ink.
On the back of your Social Security number.
Yeah, on the back of your Social Security card. That's your Treasury Direct account.
Okay. Always address every issue in court as a tax issue. You are not in law. You're in tax court.
Yeah. How many times have I told you that?
There's no money, only taxes. A bill is a money order from them. We never make anyone offers. We let them make the offer. They get the originals back. You make copies for yourself.
Who gets the originals?
They do.
Okay.
But now let's bring this back down to earth again for a lot of people. You get hauled into court for contempt. You're standing there telling the judge it's a tax issue.
We're talking about payment here.
Okay.
We're going over the payment.
Okay.
Let's finish this before you get into anything.
Okay. Number 2 is contract law. Oral contract, written contract, and performance contract. 2, performance contract is the most damaging to us. If we act like a defendant and argue law or resist zeroing our account, we are in commercial dishonor. You're toast and may go to jail.
Isn't that what you're doing? Didn't they threaten to put you in jail?
Yeah.
Well, duh. What does that say? Can you read that?
Which one? Treasury Direct account is your credit. Social Security number is your Treasury Direct account and your name. Your credit, when used by anyone, you or them, has to be reported on your taxable income on a 1040 and a 1099 OID, a 1096, and a 1040V to the IRS every year. Let's explain this a little bit more because back on 3.5 or 3.12, you said we don't use the 1040V.
No, I didn't say that. You use the 1040B. You always send the 1040B.
I thought the 1040B only had to be done at the end of the year, period.
No.
Explain that a little bit.
The 1040B is a payment voucher. Let's go over this first, and this explains everything. We got examples in here of how to fill it out.
All right. So then your Treasury Direct account must be kept at 0. just like your checkbook. That is why you have to file your taxes. That equals, all of that equals, credit equals, all debtors had to use your credit to pay their bills so they could function in commerce. HJR 192. The product is already paid for because they used your credit to build and pay for it. However, the bill is a new offer, and it tells us how much of our credit they used.
Well, so you have to report that as income to get the interest back.
But it's income to them.
Yeah.
Okay, so we're building this package of what we have to do if we do a money order package. We have to have the 1096, the 1040V, the 1040, the OID. What else?
See, it's not tax. See what that says?
Where?
On page, read the screen.
Credit that they use is tax exempt. It's not tax exempt until we tax it by filing our 1040, 1099 OID, 1096, and 1040V.
So what you're doing is taxing it. You're assessing the tax that they owe. What is the tax that they owe?
Whatever the bill is.
Well, and what does that represent?
Well, that represents the tax, the inheritance tax, because they took ours out of our treasury. They used our credit.
No, it represents the interest that they used on the principal. They're spending your interest and you're spending the principal.
Explain that.
Well, that's the accrual method of accounting. Interest accrues to principal. The tax return is the interest that they use on your principal. They're out there spending your interest and they never return it back to you. That's why the accounting ledger, the payables and the receivables are out of balance, because they never return the interest back to you as the principal. They spend it all and they make you pay the tax.
And we change that.
You keep doing that. You keep spending. You keep paying the taxes, and you're depleting all they're using your exclusion, and they're paying. They're spending your interest, and you're paying the tax on it.
So, and how you turn that around is by filing these 1040, 1099 OID, 1096, and 1040V.
By doing a pay to the order of. On the bill, in red ink.
Now,
and it tells you down here how to do that. See, this tells you what's going on.
okay, so this week we'll send out this zero your account. People want to know exactly the forms. If you have a traffic ticket, let's say, or you have a charge against you in the municipal district court, some sort, and you take that ticket, first of all, you turn the original back into the court or to the cop that issued it, and then you also fill out the 1099 OID, the 1040, the 1096, and the 1040V, attach it to that and give it back to them, right? Or or where do you send it? To an IRS, or what do you do?
Well, we're going to go through this. We're going through. You're getting ahead of the game.
Okay, we're trying to put this all together so it makes a picture.
In fact, here it is, right here. It says pay to the order of. I put pay to the order of. This is how you do it.
Okay.
When using, go ahead and read this.
Okay, when using the pay to the United States Treasury on a bill along with the 1040V, this is the streamlined version. This means you have to assess or charged the tax account and it goes to zero. The 1040V is a tax return which assesses or charges the account. It replaces the long 1040 form and is used for a particular issue. When using the money order on a bill along with the 1040V, send the originals to IRS along with the original 1040V. Send a copy to whomever sent the bill. You have the option of doing the 1099 OID and the 96. The OID identifies me as a sponsor of the credit that funded the Treasury bill in the first place and is also taking the bill to exempt status. Used for any dollar claims. The 1040 used for your yearly, quarterly tax return along with the OID, the 96, and the 1040V. Explain that because people are getting confused over that with the emails that I'm receiving. They've read the zero your account numerous times, and it's still not making a picture for them exactly. When you have, let's take an example. Use me as an example. I was charged with impersonating a police officer. That's a charge that I'm defending against. So I put together the money order on the charging bill, which is the tickets.
How much was the ticket for?
I don't know that it was even listed. There was just a statute listed.
Well, it's not a bill then.
Okay, so what do you do then?
Well, what did they send you?
They handed me a ticket that did not have, just had a statute on it. It did not have an amount on it.
Well, send it back to them. Whoever gave you the ticket.
So that was done with the money order, which I let IRS figure out what the amount was. But I did not attach the OID, the 96, or the 1040V to it. So now,
well, yeah, but you didn't get a bill because there was no dollar amount there.
There was no dollar amount, but they're still trying real hard to put my butt in jail.
Well, you quit talking about going to jail and address the issue. There was no bill. You didn't get a bill from them. If there's no dollar amount on it, it's not a bill.
Okay, so explain that. A lot of people on the line here are saying, we get tickets, we don't have to sign them, we get things, there's no monies on them, but they want to charge us with all these crimes, and we want to make them go away.
We're addressing the bill issue here. Don't
So
get off on a tangent. You're talking about something entirely different.
I'm just talking about the email, the questions that I've received and that I am receiving tonight on the radio, on this webinar for what people.
Yeah, but this is talking about money orders. Money.
So what you're telling me is that the money order is only good on a deed of trust or something that has a dollar figure on it.
Yeah, where they're sending you a bill for payment.
Okay. What I'm seeing here is that we can also look up, if you're being charged with a crime, they do have a dollar figure on those crimes that are civil, but they're not crimes. But anyway, in the criminal statutes, they do have a dollar amount figured on those, and so you just put the dollar amount on your money order?
Well, ask them to send you a bill. Say, how much is the traffic ticket? I want to pay it. Send me a bill. You guys got to learn how to communicate with these people. Instead of getting mad at them, you guys don't know what you're doing. You got to ask them for a bill.
Well, what people are saying and doing here is that fine, we got to ask for the bill. Now, that's where the confusion comes in at. Is it a simple 2-sentence letter to the prosecutor or to the mortgage company CEO or to the whatever you're dealing with?
Well,
Send me the bill.
whoever issued you the ticket.
And most of the time, those individuals treat you and answer you with silence. So the money order is used for anything that has a dollar figure on it.
That's what it's for. It's not a money order if there's not a dollar amount on there. What does that say? Example. You can read, can't you? What does that say?
Where am I reading?
Where it says 1040V statement. You send with your check or money order.
The 1040V used for 1040V statement you send with your check or money order for any balance due on the amount owed, for any bill of the surety, make money order payable to the United States Treasury.
What does that say? Read that again.
Make it payable to the United States Treasury.
No, that sentence you just read, what does it say? Read it again.
The 1040V statement you send with your check or money order for any balance due on the amount owed.
What does that say? Read that again.
Due on the amount owed.
Well, don't you have to have a dollar amount in order for it to be a money order?
Okay. Say
you can't endorse a blank piece of you can't endorse a piece of paper with no dollar amount on it as a money order. It's not a money order.
Okay, so let's switch horses here and talk about child support. An order for child support has a dollar amount on it.
Well, this tells you. Let's go through it. Finish reading it.
Okay. For any bill, the surety straw man, make money order payable to the United States Treasury. Number one, you have the original offer. Do the 1040V for the amount of the money order. Do the money order on their bill and any envelope that has the fee penalty for private use on it. Let's go over that a little bit. If it's got a red meter strip stamp, how much is it on that one, Gene? And there's a penalty for anything in black, too. So if
I use that on this court thing. I charge them with a penalty for private use. They are private debt collectors.
So
we're trying to get the wording right here. Don't get sidetracked by going into all this extraneous matter. Talk about what's on what you're reading here.
The example: money order, date, pay, print out the dollar amount, pay to the United States Treasury and charge the same to their name.
Go back up there and finish reading where it says 1040B.
I did. I read it all. The 1040B.
It's assessed and charged as a tax because there is no money.
Oh, okay. I was down at the next sentence on that. These two documents assess the taxable income that is in any and all accounts. The 1040 assessment is a charge to zero the account. Assessed and charged is a tax because there is no money. Only debt credit.
Okay, what does the next sentence say? Read it.
Which one? The 1040V statement you send with your check or money order for any balance due on the amount owed for any bill, the surety or the straw man, make money order payable to the United States Treasury.
The original offer. They're making you an offer. Now read what does it say?
Now read what?
The next sentence.
What, the original offer?
No, the next sentence.
Always sign your name on the right-hand side of the money order. That is the credit principal.
No, that's not the next sentence. Go back up. You jumped all the way from you missed all that.
Missed what?
Where it says the number 1. Do you see the Roman numeral 1?
It says the original offer.
Now what does the next sentence say?
Do the 1040V for the amount of the money offer. Do the money order on their bill and any
Do
envelope.
the money order on what?
Their bill.
And what is the bill?
A light bill, phone bill, any piece of paper with a money amount on it.
Well, you convert it to a money order.
And so you do the money order on their bill and any envelope that has the fee penalty for private use on it. So folks, start saving your envelopes. Every envelope from every agency either has a red meter strip stamp on it or a black meter strip stamp on it, and both of them carry a fee penalty.
For private use. They can't use it for private use.
Explain that.
Well, they're private debt collectors. They're not public debt collectors.
They're trying.
These are private debt collectors.
And they're trying to convince you that it's a public agency, but they are, in fact, a private debt collector, which they have not qualified to be.
Right.
Okay?
So you finish reading it. It says example, money order.
Money order, date. Pay. Print out the dollar amount, just like you do a check, and then next to the dollar sign you put the number. Pay to the United States Treasury and charge the same to
You put pay to the order of. You got to put the word order in there. Pay to the order of.
Okay. In this example, it says pay, but we've learned that you've got to use pay to the order of. And when you say pay to the United States, you need to say, and Timothy Geithner, governor of the IMF.
Then you put charge
The better way to say this is charge the said sum.
To the person who sent you the bill. You're charging them for the tax.
Right. Address you are sending it to. Now
that's their address, the address of the person that's sending you the bill.
So if you didn't include the address, did that invalidate it?
Well, you're supposed to put the address there.
Okay.
Put their name again. You guys, you got to go learn how to read. You're not reading this.
Okay, so then
their name. What does that say?
What's what? We're losing you, Gene. We're losing you. Did we lose you?
Are you there?
There, now you're there. Okay, so charge the said sum to their name and in this example it says memo account. But in the other examples, Gene, that you've been teaching for quite some time, you say credit the memory of my account.
That's what, I put credit to the memory of my account, yeah.
And then you put your Social Security number with the dashes?
Yes.
Okay.
It says always sign your name on the right-hand side of the money order.
Okay, and always sign. What we've been doing is signing the bottom right-hand corner on the front and the back side, the bottom right-hand corner. with your name in red ink.
You got to do it in red ink.
Right.
Okay.
Now, is there any specific way that you sign your name in red ink?
Just put your name, your first and last name.
What if some people choose to only use their first and second name? Does it matter?
No, just put your first and last name then.
Okay. Remember, folks, this example that Jean's showing us was March of 2007, so there's probably been some updates to this, but this gives you the general idea of how you do the money order. And
everybody that's done this and done it right has been successful with it. Okay, we're going to go on to the next page. Okay, what does that say?
You can do the 1099 OID. It's up to you. If you're not in a court case, send the original documents to the IRS and send a copy to the person who sent the bill. The Treasury will pull your credit from whoever made the original offer. Don't worry about your copy when you are in court. It's your account, so you can handle your private matters how you want to. I would suggest that you take care of the federal and state tax bills by doing the yearly 1040 long form filing first to clear up your account. But these are private decisions that you must make yourself. So if a person used a money order format but did not attach these, the OID and the 1040V, can a person go back and do that and resubmit?
Yes, you can do that.
In order to correct what you did wrong. Now
if you didn't do it right, yes.
Okay. I mean, say a person took the original and said you don't have the original anymore.
Well, then use a copy then. And
you can use a copy, okay? Now down here it says, write the money order on their bill/envelope. Do a 1040V for the amount of the bill envelope. Are those put together, the two amounts, or are they separate?
Oh, you put them on. I do them separately. I do it on the envelope.
Okay, so you have a 1040V for the envelope and a 1040V for the bill. You have a money order for the bill and a money order for the envelope. Then you have a 99 OID for the bill and an OID for the envelope. And then you also do a 96 for the bill and a 96 for the envelope, right?
Right.
Okay. Whoever made the offer, gets back their original bill, the original 1040V, and a copy of the OID. Now,
then it tells you where to send it to the IRS. You send the copies to the IRS, but you can do a letter and tell them to fill it out if you don't want to do it. Have them fill it out.
So then you wouldn't have to do the OID and the 96 and the 1040V if you just did the letter?
Yeah, you can go down. You got to finish reading this. That's why you can't jump around. Okay, what does this say?
It says use these two letters below when you are sending your first filing to the IRS. Your address, your town, your date, Department of the Treasury, IRS, Kansas City, Missouri, 64999. Dear Senior Supervisor, the enclosed 2006 Federal Tax Form 1040, 1099 OID, and 1096 is filed to the best of my knowledge. The 1099 OID and 1040 form is to identify me as the sponsor for the credit that funded the Treasury bill in the first place. Proof that a federal tax debt exists and proves prepayment using my credit. Since the IRS is a tax expert and knows the IRS tax laws, In the event you feel this is a fictitious or frivolous filing, please notify me within 10 days and please inform me how to file correctly to claim my credit for return to source for settlement, closing, and exchange. Treasury Direct number, Social Security number with dashes. Sincerely, your name.
And they have another one. They have another letter down here.
Okay, so you don't attach anything to those at all except the bill.
Yeah, you send the letter and let them fill it out.
Okay, dear.
This is for the tax forms.
Okay, dear Senior Supervisor, I did file all the tax forms 1040, 1099 OID, and 1096 that I have records for, but I've lost most documents pertaining to tax filings. I request that you prepare and file my federal tax forms 10400-/1099 OID and 1096 returns that are due. Please
that
file.
Should be 1040.
It should be 1040/1099
OID.
Please file the liabilities as taxable income to me, but to omit filing or posting deductions against taxable income to me, making adjustments to dilute the liability on taxable income, as that is a conflict of interest. This request is for return to the source for settlement and closing and exchange. Treasury Direct account number, Social Security number with the dashes. Also in the 99 OID, the correction box at the top should be checked, and also the Treasury Direct number, Social Security number with dashes, is to be placed as the account number at the bottom of the 1099 OID under recipient to prevent liability, identity theft, and the account being intercepted and diverted or deferred if left open. Respectfully, your name, your Social Security number with the dashes, by your name, and under that Social Security number without the dashes, your address, your town, and the date.
Okay, now we're going to go on to the next page. This is how you fill out the OID.
Okay. We've used almost an hour on this, Gene. I think we can supply everybody with the Zero Your Account, and they can see these examples and fill in the forms that are in that. The only form that's not in that publication is the 1099A and the 8281.
You don't use an A on an OID.
So you don't use the 1099A.
You don't use an A on an OID.
Okay. What do you use the 1099A for?
For abandonments or acquisitions. Or you can do a 1099C for cancellation.
So that would, the abandonments and acquisitions is your foreclosures.
Yeah.
So then you do not do an OID on a foreclosure.
Well, you could do an OID, claim the amount of the loan as an original issue discount.
And then you do not do the 1099A.
Then you don't do the A. You don't do the A if you do the OID.
Okay,
You can't do both of them.
It's one or the other.
It's one or the other.
Okay. So which is the best to do on a foreclosure? The OID?
I would do the 1099C, cancellation.
And I think that's in the Zero Your Account too. See, this is what people are having problems with. Which form goes with which situation?
Well, you don't use an A or a C with an OID.
But how do you know?
Depends on what you're trying to do. If you're claiming it as an original issue discount, you use the OID. If you're doing a debt cancellation, you use the 1099C. If you're doing an acquisition, you use the 1099A.
Okay, what's an example of an acquisition? What's an example of a...
Well, that's what they did. They got the property because they didn't transfer that. They never transferred it, so it went into default.
Let's bring it back down to kindergarten level, below kindergarten level, diaper level, I'm going to call it, for some people. If you have a foreclosure and you want to keep the property and pay the bill, you use the acquisition form right?
Well, let's go into the Treasury regulation because it explains it.
Okay, and that's
you got to understand tax law before you start going into this.
Okay, see, this is what people are having problems wrapping their mind around.
Well, this tells you. I'm going to go into that. That's why I wanted to go into that before I got into this, because nobody understands tax law.
Okay, so these forms that are in the 0-year account, they explain them and tell you what it is.
What you should do is send it out to everybody and let them. They even spelled this wrong. That's spelled wrong. There should be an O in there. Authorized representative. Yeah, it should be an O.
Okay.
You need to go over these forms, and if you have any questions, write them down.
Okay.
And here's your payment voucher. It tells you how to fill it out. You put your first name here. Put your Social Security number. It's self-explanatory. The amount you are paying by check or money order. What's the money order? The bill. You converted the bill to a money order. You put the amount from the 1096 on here. And you send this in you send them the originals.
Okay, so a number of years, several of us did these 1040Bs.
You didn't do them right. You can't do this unless you understand what tax law. That's why you're having problems. I'm going to go into the tax law now. This tells you what the tax law is. Can you read that?
Yes.
I sent you copies of all this. Read that, what that says.
The making the REIT foreclosure property election.
Read what it says.
An election to treat property as foreclosure property under 20585 must be made by the date for filing the real estate investment trust's tax return. That's the REIT, R-E-I-T. With extension.
I think they have to do this within 30 days after they acquire the property, and they're not doing that.
Because if they do it, they have to pay the tax return. That's the reason they're not doing it.
Well, they have to file the tax return to get the election to qualify as a real estate investment trust. So they don't have to pay any taxes. But they're not doing that.
Right. The election is made on a statement that must be attached to the return for the tax year in which the trust acquired the property for which the election is being made.
So the first thing they do, the trust has to acquire the property. Well, they never transferred the deed of trust and the promissory note to the REMIC, the Real Estate Mortgage Investment Conduit, which is a real estate investment trust.
Okay, so
they can't do the election or file a return until they transfer the loan documents to the REMIC, and they haven't done that.
Correct. So what is the question you ask to get them to admit that they did?
Well, don't get ahead of me. Let's go through this. It tells you what you have to do. You got to read all these regulations, which nobody reads.
The election.
This will answer your question.
The election generally applies to all eligible real property and incidental personal property acquired in the same tax year by the trust on the default or imminence of default.
Now, what is eminence of default? Doesn't that mean that they know it's going to go into default?
Well, it goes into default the day of closing.
Yeah, because they never transferred it.
Correct.
So the loan was unsecured because they never transferred the loan documents to the trust.
Right. So
they did that deliberately. You can't do that. And keep reading.
On a particular lease where the trust is the lessor, or on a particular indebtedness owed to the trust. So when they don't transfer your deed of trust connected to the promissory note,
and they're not the lessor, and you're not the leasee, and they can't do an unlawful detainer. That's how they construe the trust as a lease agreement. And you're the tenant. That's why they do an unlawful detainer. And they can't do that unless they transferred the loan documents to the REMIC to become the lessor and to file the tax return and take the election to treat it as foreclosure property. Right. They haven't done any of that.
And folks, this is in 34 Amjur 2nd, Federal Taxation 20586. I'll continue. A REIT, Real Estate Investment Trust, may revoke the election for the tax year by filing the revocation as provided by IRS by the due date with extensions for its tax return for that year. If the election is revoked as to any real property, no election may be made by the REIT, R-E-I-T, Real Estate Investment Trust, with respect to that property for any later tax year. That means once it's revoked, they're out of it. Right?
But now they have to. If they don't take the election, but before they can take the election and file the tax return, the loan documents have to be transferred to the REMIC, and they haven't done that. That's the first thing they have to do is transfer the loan documents, the deed of trust, and the promissory note have to be transferred to the REMIC. Then they have to take the election.
So
and file a statement with the election.
If they're coming after you and saying, you're in default, this is a notice of default, one thing the homeowner could do is please provide the receipt of the transfer of the deed of trust and the promissory note into the real estate investment trust.
You want to ask them for the statement and the tax return. And we should finish reading it because the regulations tell you exactly how they have to do it. And we haven't gotten into that yet.
All right.
So we finished reading this.
I did.
Okay, now we're going to go into here's the regulations governing this. Here's the regulations that they have to go by. I want you to read this very carefully.
Which one? Correctness. Foreclosure property 1.856-6. In general, under Section 856E, a real estate investment trust may make an irrevocable election to treat as foreclosure property certain real property, including interests in real property, and any personal property incident to the real property acquired by the trust after December 31st, 1973. This section prescribes rules relating to the election, including rules relating to property eligible for the election. This section also prescribes rules relating to extensions of the general 2-year period, hereinafter grace period, during which property retains its status as foreclosure property, as well as rules relating to early termination of the grace period under Section 856E4. The election to treat property as foreclosure property does not alter the character of the income derived therefrom, other than for purposes of Section 856C2F and 3F. For example, if foreclosure property is sold, the determination of whether it is property described in Section 1221(1) will not be affected by the fact that it is foreclosure property.
Those are prohibited transactions. We'll get into that later
That's
on.
under the penalties that are listed under the 4490 form. Right?
Yeah.
Okay. Property eligible for the election. Number 1, rules retaining to acquisitions. In general, the trust must acquire the property after December 31st, 1973, as a result of having bid in the property at foreclosure, or having otherwise reduced the property to ownership or possession by agreement or process of law after there was default or default was imminent on a lease of the property where the trust was the lessor, or on an indebtedness owed to the trust which the property secured. Foreclosure property which secured an indebtedness owed to the trust is acquired for purposes of Section 856E on the date on which the trust acquires ownership of the property for federal income tax purposes.
They never acquired it because it was never transferred.
Correct. Foreclosure property which a trust owned and leased to another is acquired for purposes of Section 856E on the date on which the trust acquires possession of the property from its lessee. A trust will not be considered to have acquired ownership of property for purposes of Section 856E where it takes control of the property as a mortgagee in possession and cannot receive any profit or sustain any loss with respect to the property except as a creditor of the mortgagor. A trust may be considered to have acquired ownership of property for purposes of Section 856E, even though legal title to the property is held by another person. For example, where, upon foreclosure of a mortgage held by the trust, legal title to the property is acquired in the name of a nominee for the exclusive benefit of the trust, and the trust is the equitable owner of the property. The trust will be considered to have acquired ownership of the property for purposes of Section 856E. Generally, the fact that under local law the mortgagor has a right of redemption after foreclosure is not relevant in determining whether the trust has acquired ownership of the property for purposes of Section 856E. Property is not ineligible for the election solely because the property, in addition to securing an indebtedness owed to the trust, also secures debts owed to other creditors. Property eligible for the election includes a building or other improvement which has been constructed on land owned by the trust, which is acquired by the trust upon default of a lease of the land. Explain that.
Well, it's default of the lease. See, you have a leasee, which is the borrower, and the lessor. See, you're leasing the property because the assumption is that the deed of trust and the note were transferred at closing to the REMIC. So now the REMIC owns the land and the deed of trust and the land attached to it, which is the corpus of the deed of trust.
Okay, but you're telling us that it was never transferred to the trust.
It was never transferred, and I'm going to tell you why it was never transferred. But we got to finish this first. Let's finish this, and I'll show you why. And it says that they can't transfer it.
Okay, personal property. Personal property, including personal property not subject to a mortgage or lease of the real property, will be considered incident to a particular item of real property if the personal property is used in a trade or business You made it
is
go away.
used in a trade or business.
Business conducted on the property or the use of the personal property is otherwise an ordinary and necessary corollary of the use to which the real property is put. In the case of a hotel, such items as furniture, appliances, linens, china, food, etc. would be examples of incident personal property. Personal property incident to real property is eligible for the election even though it is acquired after the real property is acquired or is placed in the building or other improvement in the course of the completion of construction. Property with respect to which default is anticipated.
So this is very, very important. Read this.
Property is not eligible for the election to be treated as foreclosure property if the loan or lease with respect to which the default occurs or is imminent was made or entered into, or the lease or indebtedness was acquired by the trust with intent to evict or foreclose, or when the trust knew or had reason to know that default would occur. Improper knowledge.
Now, did they have knowledge to know that there was going to be a default?
Because it was imminent at closing.
Yeah. Why was it imminent?
And the poor homeowner didn't know anything about it.
Okay. Why was it imminent?
Because they didn't transfer it to the REMIC.
Right. So they had improper knowledge, didn't they?
Okay.
And they had reason to know of the default, didn't they? Because they never transferred it. So they had both intent and knowledge. Improper knowledge with respect to the lease or loan.
Okay. For purposes of the preceding sentence, a trust will not be considered to have improper knowledge with respect to a particular lease or loan if the lease or loan was made pursuant to a binding commitment entered into by the trust at the time when it did not have improper knowledge. Moreover, if the trust, in an attempt to avoid default or foreclosure, advances additional amounts to the borrower in excess of the amounts contemplated in the original loan commitment or modifies the lease or loan, such advance or modification will be considered not to have been made with an intent to evict or foreclose, or with improper knowledge unless the original loan or lease was entered into with that intent or knowledge.
So what they really did at closing is they did a loan modification, didn't they?
And when they put the allonge on the back and deposit it, isn't that a modification with improper knowledge?
Yes. That was improper knowledge, and they did it with the intent. They didn't transfer the loan documents with the intent to cause a default.
So this is what every homeowner embroiled in a foreclosure, embroiled in a where they want to take you off the property, unlawful detainer. This is a section the homeowner takes in and stuffs under everybody's nose.
I'm going to draw up a letter this coming week. I can kill a mortgage with a letter.
Well, we got people going to court on Wednesday, Thursday, and Friday this week. Can you get it to me before Wednesday?
I'll try.
I'm going to put it on my list here. Letter, foreclosure letter. To court. Okay. You want me to keep going on election?
Yes. This is really important stuff.
Number 1 in general. An election to treat property as foreclosure property applies to all of the eligible real property acquired in the same taxable year by the trust upon the default or as a result of the imminence of default on a particular lease where the trust is a lessor or on a particular indebtedness owed to the trust. For example, if a loan made by a trust is secured by 2 separate tracts of land located in different cities, and in the same taxable year the trust acquires both tracts on foreclosure upon the default or imminence of default of the loan, the trust must include both tracts in the election. For a further example, the trust may choose to make a separate election for only one of the tracts if they are acquired in different taxable years or were not security for the same loan. If the real property subject to the same election is acquired at different times in the same taxable year, the grace period for a particular property begins when that property is acquired. Number II, if the trust acquires separate pieces of real property that secure the same indebtedness or are under the same lease in different taxable years because the trust delays acquiring one of them until a later taxable year, and the primary purpose for the delay is to include only one of them in an election, then if the trust makes an election for one piece, it must also make an election for the other piece. A trust will not be considered to have delayed the acquisition of property for this purpose if there is a legitimate business reason for the delay, such as an attempt to avoid foreclosure by further negotiations with the debtor or lessee. Number 3.
Well, let me ask you a question. Was the borrower or the lessee, was this contract between the servicing company and the investors, was it memorialized or subscribed to by the borrower?
Put that in kindergarten language. What do you mean, memorialized or subscribed?
Okay, all of this REMIC and Real Estate Investment Trust is a part of the pooling and servicing agreement. Was the borrower a party by writing and by signature to the pooling and servicing agreement?
They never are.
Well, then how they can't bind you on this is evidentiary. This is why you got to bring up the statutes of frauds, 1624 of the California Civil Code. And then the Uniform Commercial Code is 2-201. It's called the statute of frauds. You cannot make somebody liable on a contract that's not memorialized or subscribed to by them. In other words, if it's not in writing and they didn't sign it, they're not liable on it.
Okay.
This is called the statute of frauds. The statute of frauds is designed to stop the very thing that they're doing, but nobody's bringing it up in court.
Okay, so that means that there's never been a meeting of the minds.
Right, there's no contract. That's what Joseph's story meant, or Christopher's story meant, when he said there was no contract between the borrower and the lender.
Right.
The borrower is who? The borrower is the
homeowner.
The homeowner. Who's the lender? The trust. There's no contract between the trust and the borrower.
So you need to, a homeowner needs to ask for a copy of the contract between them and the real estate investment trust.
Right, under the statute of frauds.
Under the statute of frauds.
I can kill it. I'll guarantee you I can kill it
So when you walk into court and say there's no evidence in the record of the contract between me and the real estate investment trust, and there's no memorialization, and there's no signature on any kind of a contract anywhere between me and that trust, what are we doing here?
Good question.
And the judge would then have to answer that question. Because if you don't answer that question, Judge, you are liable under Section 856E.
Right.
There's your statement for everybody that's an unlawful detainer, and Jean's going to prepare a letter, and there's your statement to any attorney, to any judge, to any clerk, or to any CEO or attorney for the mortgage company. Put it in a request for discovery and watch them run. Right, Gene?
Yeah. Watch them parachute. Tell them you got a parachute.
And
So that when they
let them
jump out the
know,
window, they don't kill themselves.
and let them know that if they don't provide that, copy in original, certified in original, front and back of every page, with your memorialization and your signature on it, then you will provide the necessary reporting for their violations under Section 856E. You want me to keep reading?
Hell yes, we're getting it. We haven't even got to the best part yet.
Okay. All of the eligible person under III, under
Now,
1.
let me ask you a question. How come nobody's ever brought this up in court?
Have no idea because we didn't know it was there. All right, let's continue here. All of the eligible personal property incident to the real property must also be included in the election.
So that all your furniture is personal property, isn't it?
Well, property that's incident to the real property, like in the example of the hotel or the motel.
Yeah.
Okay. Time for making election, number 2. The election to treat property as foreclosure property must be made on or before the due date, including extensions of time, for filing the trust's income tax return for the taxable year in which the trust acquires the property, with respect to the election being made.
Read that again.
The election to treat property as foreclosure property must be made on or before the due date, including any extensions of time, for filing the trust's income tax return for the taxable year in which the trust acquires the property with respect to which the election is being made, or April 3rd, 1975, whichever is later. Okay, the taxable year, the due date is the 90th day, right?
Well,
or is
whatever
it the 30th day that they have to make the election?
The 30th day.
The 30th day after closing. How many of your property situations had this election made within the first 30 days?
Yeah, but you got to remember, you got the cart in front of the horse. What did they have to do before they did the election and the return?
They had to transfer the deed of trust with the promissory note into the REMIC.
Well, they never did that, did they?
They never do, they never did, and they never will because they don't want to pay the taxes. In order to transfer, they got to do their 1040 tax return to pay the taxes.
Yeah. Well, they don't have to pay the tax if they transfer it. They can't transfer it. I'm going to tell you why they can't transfer it. They cannot not only transfer it, they can't hold it, and they can't negotiate it.
Because they're not the holder in due course.
Because they don't own it.
Right. The homeowner owns it. The homeowner is the holder in due course.
Yeah, they're still trying to figure out. Finish reading this.
Manner of making the election. An election made after February 6, 1981 shall be made by a statement attached to the income tax return. Are you listening?
By what? How's the election made?
By making a statement attached to the income tax return in the for the taxable year in which the trust acquired the property with respect to which the election is being made. Their statement has to be attached to their tax return.
Okay.
The statement shall indicate that the election is made under Section 856E and shall identify the property to which the election applies. The statement shall set forth.
Okay, here's what else has to be in there. I want you to go through each one of these.
The name, address, and taxpayer's identification number of the trust.
Okay, who is the name? Who are they talking about here? Who's the taxpayer that they're talking about?
The Real Estate Investment Trust.
Right. The REMIC.
They also have to put the date the property was acquired by the trust and a brief description of how the real property was acquired, including the name of the person or persons from whom the real property was acquired, and
who they acquire the property from?
The homeowner. And a description of the lease or indebtedness with respect to which default occurred or was imminent.
Go ahead and finish it.
An election made on or before February 6, 1981 shall be filed in the manner prescribed in 26 CFR Code of Federal Regulations 10.1F, revised as of April 1st, 1977. Temporary regulations relating to the election to treat property as foreclosure property as in effect when the election was made. Status of the taxpayer. Let's go back a little bit on that one before, Gene. They have to provide the taxpayer's identification number or the CUSIP number of them, of the trust, and they have to do the date that they got the property, and they have to describe how the property was acquired.
Well, they can't do that because they never acquired it, did they?
They have never acquired it. So they can't name a person or persons who they acquired it from, and they can't give a description of the lease or indebtedness to which the fault occurred when they knew it was going to occur, that it occurred on closing. Right?
Yeah.
Status of taxpayer. A taxpayer may make an election with respect to an acquisition of property only if the taxpayer is a qualified real estate investment trust for the taxable year. They have to be qualified. They have to be a qualified real estate investment trust for the taxable year in which the acquisition occurs.
Now you know why it's not a qualified mortgage, as defined in Section 860G of Title 26.
Right, it tells you.
It's because it's not a qualified real estate investment trust, so it can't be a qualified mortgage because they never transferred it.
They never qualify it by transferring. Therefore, it cannot be a qualified mortgage, and therefore it cannot. You cannot be liable. Right?
Okay. Now, who does this? Now read this. This is very important here.
If, however, the taxpayer establishes to the satisfaction of the district director for the district director.
So they have to file these documents with the district director.
For the
so
internal
where do you go to get
district.
copies? Where do you go to get to establish that they didn't file the statement and the tax return?
Well, I know everybody here goes to Seattle. That's where the district office is.
Okay, you go to the district director.
Right.
Go ahead and finish reading it.
In which the taxpayer maintains its principal place of business or principal office or agency. Well, now some of these mortgages are clear back in Delaware.
Well, then you go to the Delaware then.
Okay, that its failure to be a qualified real estate investment trust for a taxable year was due to reasonable cause and not due to willful neglect. Explain reasonable cause and willful neglect.
Well, this is they got a justifiable reason for not transferring it. They don't have any. It was willful neglect. Let me put it to you this way. They couldn't transfer it because they don't own it.
Okay, but this is saying that the taxpayer, which is the trust, right?
Right.
Has to say that it was reasonable cause and not due to willful neglect, even though they couldn't transfer it because they didn't own it, so that's willful neglect.
Right.
You want me to keep reading?
Keep reading, yeah.
The principles of 856-1, 856-7C, and 856-8D, including the principles relating to expert advice, will apply in determining whether, for purposes of this subparagraph, the failure of the taxpayer to be a qualified real estate investment trust for the taxable year which the property was required was due to reasonable cause and not due to willful neglect. If a taxpayer makes a valid election to treat property as foreclosure property, the property will not lose its status as foreclosure property solely because the taxpayer is not a qualified real estate investment trust for the subsequent taxable year, including the taxable year which encompasses an extension of the grace period. However, rules relating to the termination of foreclosure property status in 856E4, but not the tax on the income from foreclosure property by 857B4, apply to the year in which the property is acquired in all subsequent years, even though the taxpayer is not a qualified real estate investment trust for such year. That's kind of speaking in double terms, double speak.
Well, if they can show, but they can't, I'm going to show you why they can't show justifiable cause. They have to transfer it if they want to be a qualified real estate investment trust.
If they want to claim not willful neglect, the other one, then
excusable negligence.
Negligence. If they want to claim that, then they have to show that they transferred the property within the prescribed time.
Yes.
And show that they owned the property, which they can't do.
Yeah. What's your first clue?
They don't own it. They didn't transfer it.
Why don't they own it?
Because the homeowner is the one is the source of the funds. They're not the source of the funds.
Okay. Well, we're going to go into that. I'm going to show you why they can't transfer it. They have a 2-year grace period, but they can't transfer it. It doesn't matter how long it is.
Termination of a 2-year grace period. Under Section 856E4 Big A, all real property and any incidental personal property for which a particular election has been made, paragraph C1 of this section, shall cease to be foreclosure property on the first day occurring on or after the day on which the trust acquired the property, on which the trust either 1. Enters into a lease with respect to any property by its terms will give rise to income of the trust, which is not described in 856C3, other than Section 856C3F, big F, or 2, receives or accrues directly or indirectly any amount which is not described in 856C3, other than Section 856.3F, big F, pursuant to a lease with respect to any of the real property entered into by the trust on or after the day the trust acquired the property. For example, assume the trust acquires, in a particular taxable year, a shopping center upon the default of an indebtedness owed to the trust. Also assume that the trust subsequently enters into a lease with respect to one of several stores in the shopping center that requires the lessee to pay rent to the trust, which is not income described in Section 856C3, other than 856C3F. In such case, the entire shopping center will cease to become foreclosure property on the day the trust enters into the lease. How does that apply to a homeowner with just a regular family home?
Well, if it's not transferred, then it's not it's in default. But this is talking about trusts they do. This is talking about a commercial loan, in which
Okay.
you have a shopping center. But the
Does
same
that,
thing applies to a homeowner because he's even though it's not a commercial loan.
right?
It's a
But aren't they treating the deed of trust as the lease?
yes. Well, yeah, but it's only a leasing lesser relationship if the property is transferred to the trust because the trust owns it. If they
Okay,
don't
but
own it, then they can't, you don't have a lesser leasing agreement.
so the trust cannot own the property,
Unless it's transferred.
and they can't transfer it because they can't own it because they're not the they're not the source of the funds.
Well, I'm going to go into it. Let's finish this first. Don't jump ahead of me.
What am I doing? Extensions or renewals of leases, excuse me. Generally, the extension or renewal of a lease of foreclosure property will be treated as the entering into a new lease only if the trust has a right to renegotiate the terms of the lease. If, however, by operation of law or by contract, the acquisition of the foreclosure property by the trust terminates a pre-existing lease of the property or gives the trust a right to terminate the lease, then for purposes of 856E4A, big a trust in such circumstances will not be considered to have entered into a lease with respect to the property solely because the terms of the pre-existing lease are continued in effect after foreclosure without substantial modification. The
Okay, when they do an unlawful detainer, don't they want you to pay rent?
Yeah,
Well, where do you think that's coming from? Because they're treating the property as leased property.
but they don't own
They're
it.
acting as the leaser and you're the leasee.
So, but they can't do that because they don't own it.
That's right. Because it was never transferred to the trust. Nobody brings this up.
I hope everybody is taking very good notes.
Okay, read this number 3 here.
Rent attributable to personal property. Solely for the purposes of 856E4A, a trust enters into a lease with respect to real property on or after the day upon which the trust acquires such real property by foreclosure, and a portion of the rent from such lease is attributable to personal property which is foreclosure property, incident to such real property. Such rent attributable to the incidental personal property will not be considered to terminate the status of such real property or such incidental personal property as foreclosure property.
So they have a grace period, but they have to, it still has to be transferred. They can't get around that.
Okay, so we've been talking about foreclosures. I'm going to bring you back to the other issue because there's people on the line that are in court under criminal charges. How does all of this apply to the court setting other than foreclosure?
Well, this is, they have the court has a servicing agreement. They have a security agreement, servicing agreement, and they have a escrow agreement with the Federal Reserve Bank under Circular 7. You need to read Circular 7.
But how does that apply to the defendant?
Well, they're making you an undisclosed third party to their pooling and servicing agreement.
And they are not, as we learned with the Horace case, they're not abiding by their pooling and servicing agreements.
That's right. You're the beneficiary. You're the third party beneficiary, but you haven't identified yourself. That's the third
So
party
if
benefit.
you're going into court, say on a um, custody issue or child support issue, and they're hauling you in there for contempt, you can just ask the judge to ask the attorney to provide the pooling and servicing agreement that identifies you as a third-party beneficiary.
Yeah, tell them you want the contract or agreement that identifies you as a third party beneficiary.
And what if they
you'll be happy to abide by any orders that the court, because what the court is doing is acting as a fiduciary trustee.
Okay, so you could do a conditional acceptance and say, I conditionally accept what you're trying to do here today on the proof of claim that the pooling and servicing agreement between the court, the attorney, the judge, and me does not identify me as a third-party beneficiary and that I am liable.
Yeah. And that the attorney isn't acting as a private debt collector.
And that handles even child support, maintenance, or any
Sure,
kind
he's acting as a private, he's acting under 15 U.S.C. 1692. He's acting in Congress in 1986
so
under
that
public
also,
law, exempted attorneys. Attorneys do not have an exemption anymore. They're included under the FDCPA. If they're collecting any debts, they're not acting as an attorney. They're acting as a private debt collector.
and
You'll
that,
accept that on the condition that the court can prove that the attorneys are not acting as private debt collectors.
okay, and that also applies to traffic cases. Produce the pooling and servicing agreement.
Yeah, the prosecuting attorney, the district attorney, is acting as a private debt collector. He's collecting debt, isn't he?
Right.
Well.
And state that section again that says they're not exempt anymore.
It's in public law. It was passed in 1986. Scott versus Jenkins is the case.
Okay.
I'll put that up on the web. I'll include that in the documents.
Scott versus Jenkins.
Scott versus Jenkins is the case that said that. The attorney argued that he was an attorney and not a debt collector. The judge pulled the portfolio on him, and he had more than 4,000 debt collections. He says, you're a debt collector, not an attorney. I love it.
Okay. So then a good discovery question to such an attorney would be to provide any and all records of collection.
Yes.
Anything that's been paid to you in your firm or to you personally or in the firm that you work for. Right?
Well, you can use your set-off too. You say you have a defense. If they can prove that they have a valid claim, tell them you have a defense in recoupment and set-off under TILA. Public Law 111-203, passed July 21st, 2010.
Okay.
Section 1413.
Okay. There were some, we have not gotten to hardly any questions tonight. And you brought forth more study things tonight. Did we kind of bypass all that?
Well, what questions do you want to ask?
I think that we made a lot of headway tonight in people understanding what they got to do and how they got to do it.
You can't learn all this stuff in one class. That's why it has to be an ongoing thing. Okay, here's the reason they can't transfer it to the REMIC. Adverse claim. What does that say?
It says adverse claim means a claim that a claimant has a property interest in a financial asset.
What is a financial asset?
A mortgage, anything that
What does it say now? Let me move this up a little bit so you can read it.
Okay, it's a security. Financial asset means anything that is a security.
Okay.
Or an obligation of a person. Anything that evidences debt, isn't it?
Yeah. Okay, so what does this say then? Finish reading this.
Adverse claim means a claim that a claimant has a property interest in a financial asset and that it is a violation of the rights of the claimant for another person to hold, transfer, or deal with the financial asset.
Now I have to ask you a question. Can they hold, transfer, or deal with this financial asset without violating your rights?
No, and that applies to every situation out there.
Yeah.
So
yeah.
A financial asset, folks, does not just mean a mortgage or a traffic ticket. It means that they cannot hold it, they cannot transfer it, or they cannot deal in any manner with any financial asset. So when they give you a ticket or you have a mortgage or you have a show cause order into the court for contempt or you have a criminal charge for whatever they want to claiming, they cannot hold it.
Okay, what is a financial asset? Go read this right here, subsection 9.
Is a security, an obligation of a person or a share, participation.
Well, let me ask you a question. Aren't they claiming that you have an obligation?
Yeah, they want me to pay the taxes.
Okay, isn't that an obligation?
Yeah.
Well, then it's a financial asset, isn't it?
Yeah.
Finish reading that. What does it say?
An obligation of a person or a share, participation or other interest in a person or in a property or an enterprise of a person, which is or is of a type dealt in or traded on financial markets.
Isn't that court a privately owned trading company?
Yes, they are.
Okay, aren't they trading financial assets? And isn't that a violation of your rights for them to trade, hold, transfer, or negotiate that asset?
Well, that's what they're doing.
Well, yeah, but you're not bringing it up.
Well, a lot of people bring it up. And the
Well,
other side,
you got to file a claim. You can't do anything until you file a claim. You haven't even filed a claim yet.
And is the claim on the IRS forms, or is the claim a adverse claim into a court situation?
Yeah, it's an adverse claim. That's what Toby's filed. We're going to
Okay.
kick their ass too. I'm going to settle this issue once and for all.
Okay.
Okay, go finish reading this because this is important.
Which dealt in or traded on financial markets, or which is recognized in any area in which it is issued or dealt in as a medium for investment. Any property that is held by a securities intermediary for another person in a securities account, if the securities intermediary has expressly agreed with the other person that the property is to be treated as a financial asset under this article. As context requires, the term means either the interest itself or the means by which a person's claim to it is evidenced, including a certificated or uncertificated security, a security certificate, or a security entitlement.
But you have security entitlement. And how is that defined? What does that say?
Security entitlement means the rights and property interests of an entitlement holder with respect to a financial asset. The homeowner or the person, the defendant, is always the entitlement holder because we're the source of the funds.
Okay, what is the entitlement holder? What does that say?
Means a person identified in the records of a securities intermediary as the person having a security entitlement against the securities intermediary. If a person acquires a security entitlement by virtue of Section 8501B2 or 3, that person is an entitlement holder.
Okay, now what does that say? What does B3 say? Here it is. This is 8-501. Here's B, and here's 3.
Becomes obligated under other law, regulation, or rule to credit a financial asset to the person's securities account.
And what is it? It said 2 and 3. B2 and 3. What is 2? Read 2.
2, receives a financial asset from the person or acquires a financial asset for the person, and in either case accepts it for credit to the person's securities account.
Didn't they receive a security from you at closing?
Well, that's the promissory note.
Yes.
And what did they
notice the security?
And what did they receive in a court sitting?
Well, they received the instrument, the charging instrument. Whatever the instrument is that they're using to charge you with.
So when they read that into the record, they're receiving that.
Yeah, so ask them to read it into the record.
So they do.
If they haven't paid the tax on it or put up a bond to cover the tax, then they don't have a claim. Because remember, it's a tax issue. They haven't paid the tax.
So when you ask for the receipt of the bond that paid the tax.
You know what section requires that? You remember reading 2032A, E11? It says that when a qualified heir acquires property from a decedent under section 1014 of Title 26, he has to put up a bond. Do you want to go in there and look at that?
Well, that's where we are in the courtroom setting when you ask for the bond and they don't identify it. And see, the problem everybody has, Gene, in all of these situations is that a lot of people are not very good litigators. But every time you bring something to the court and they stand mute, they don't answer you, they give you silence.
You're not asking the right questions.
We're just asking for the bond that paid the inheritance, the receipt of the bond that paid the inheritance tax, which is what you were teaching us back on March 5th.
Yeah, but here's what you want to ask for. I'm going to show you here's the section. Read this right here.
Which one? Bond in lieu of personal liability. Where does this come from?
Title 26, Section 2032A.
Okay. If the qualified heir makes written you moved it.
Well, I'm showing you where it came from. Write this down.
Okay, well, they're doing screenshots. Okay,
you got it written down?
Yep, go back to where we were. Bond in lieu of personal liability. If the qualified heir makes written application to the Secretary for determination of the maximum amount of the additional tax which may be imposed by subsection C with respect to the qualified heir's interest, the Secretary, as soon as possible and in any event within 1 year after the making of such application, shall notify the heir of such maximum amount. The qualified heir, on furnishing a bond in such amount and for such period as may be required, shall be discharged from personal liability for any additional tax imposed by subsection C and shall be entitled to a receipt or writing showing such discharge. But
why are they qualified here? Because they made the name, didn't they?
The state made the name, yes. That makes them a qualified heir?
So that makes them a family of the all capital letter name, so they're a qualified heir.
Okay, but
that qualified heir is a dead person. There's been a permissive death certificate issued to the all capital letter name. So he's a decedent. And as a qualified heir, they've acquired property from the decedent. So they have a tax liability.
Okay, but they have to pay a bond to get out of personal liability.
Yeah, they have to put up a bond for the tax.
So
See
when you ask them where is your bond, your surety bond, that you to account for your personal liability, and they don't answer you.
Well, tell them. Say if you don't answer the question, then let the record reflect that the court is admitting that they don't have a bond that covers the tax liability, and therefore do not have a claim against me.
Right on.
Here's what a qualified heir is. What does that say?
The term qualified heir means with respect to any property, a member of the decedent's family.
Okay, who's the decedent?
The all capital letter name.
Okay, who's a member of that decedent's family?
The state, since they made they made it.
Yeah, so they're a qualified heir, aren't they? So
right.
They're a member of the decedent's family.
Okay. What I'm seeing is that when people walk into court as a living person, the court can't see you. They can't talk to you. They can't nothing to you. So when you ask for the bond, if you haven't done it in writing,
you have to come in there as a heir, beneficiary, or executor.
Right. And if you do come in under those capacities and notice the court of those capacities, the court, again, people are asking me. I have stood up, I've said this, I've given a written documentation, I've given a judicial notice, I've done everything but stand on my head and turn purple, and the judge in the court still treats me like I'm the deceased debtor.
Well, what kind of a court setting are you in? You can't just tell me, I don't even know what you're talking about. What are you in court for?
I'm getting questions on traffic tickets, divorces, contracts.
You got to give me a specific instance.
Property taxes, foreclosures. They're the ones hauling the homeowners into court. They're the ones doing the unlawful detainers. They're the ones hauling the defendants in and charging them with crimes that aren't crimes. They're the ones that are taking the non-custodial parent and squeezing the life out of a man.
But you ought to, you need to quit the drama. Ask the judge if he has a claim against you.
And the judge will stand mute.
No, he won't. He'll make him answer the question.
And the judge will stand mute. I have emails every day of people saying, I said that in court. I went in and asked for the receipt of the bond 14 times. And they still stuffed my ass in a mental institution for a mental evaluation.
For the receipt of what bond?
The bond that paid the inheritance tax. The exact statement that you made on the previous webinars.
Okay, and you asked the judge. What was the judge? What were you in court for?
A couple people were in court for traffic tickets. Another person was in court like me, impersonating a police officer. Another person was in court for unlawful detainer. I can go on and on and on about the mirage of different kinds of cases. The point being is that group, that trust is hauling the real people in, and it doesn't matter what you say or what you do. They're still finding you guilty. They're still kicking you out of their house, doing all this crap. And people are trying to learn as fast as they can, and that's why they're part of this.
Well, yeah, but you can't learn all this stuff in one setting.
So what do? Just get kicked out of your house and go to jail for 20 years?
Well, you got to learn this stuff before you go in there. Do you
don't have a chance to do that. Got one of my people that I know of and a couple more that are emailing me. They've already been convicted. 30 counts. They want to put them in jail for 25 years at $250,000 a count.
Were they indicted? Did they have a complaint?
Yes, they were indicted.
Yeah, did you get a copy of the indictment?
No, well, not yet, but I will. But the point being that these people did it all wrong until March 5th came along and we started the webinars. Now they're trying to figure out, well, if I learn from Gene the correct way and I get some of this documentation done the correct way, I might be able to get myself out of the hot soup before I have to go be sentenced.
Well, I'm trying to teach the people the law. You got to learn the law before you can apply it.
I'm just telling you all the emails I get, my friend. I'm just telling you all the phone calls I get. And all
well, I know what you get. I've been doing this for 50 years. You've only been doing this for 10. How long have you been doing this?
About 25 years, Gene, 30 years.
You're a novice at this.
Absolutely. Hey, you said you were going to bring a letter rogatory last week and you didn't, I didn't see it on the study docs.
I have a letter rogatory. We got to learn the law before we get in and start doing stuff. Everybody wants, that's why you guys don't win in court, because you don't know the tax law, commercial law, and trust law. You have to understand trust law before you can go in there and do anything.
Okay, here's a question. Firm is not registered and we use some of Keating's method. Now we are barred from defending our case. The judge granted plaintiff attorney to amend complaint and for us to answer in 15 days. She's trying to get us to hire an attorney. What do you recommend? Mina.
Hire an attorney for what? What kind of case is it? Is it a criminal case? Is it a foreclosure case? Is it a traffic case?
I don't know. They just said that the attorney firm was not registered. Wherever they are.
What does that got to do? Answer the question. What are the people in court for?
Gene's email is on the information letters, folks. MichnowskiTom@yahoo.com. Somebody wants to know if you travel without a license plate on your car.
Yes, well, I put my own license plate on there. And what has that got to do with what you're in court for? A court is a place where a contract is made. You go in there and make contracts with these people.
A lot of people are saying they use Karen Tappert's process on the 1099 OIDs, and they're not working.
They used what on what?
I got to go back to it again because I'm just scrolling through this.
What are you reading from?
The questions that everybody's writing.
What is the question? Ask me the question.
Many people were using the Karen Tappert way to do the 1099 OID, and obviously that way was not correct. Can we do a class on the proper way to file the 1099 OIDs?
That's what we were working on tonight.
That's what we did earlier tonight. If you were listening, you get the 0-year account file. We'll be sending it out this week.
You can't learn all this stuff overnight. You got to read this stuff and study it. You got to do homework. What do you think you go to school for? When you go to, it takes 4 years to graduate from high school and get a diploma. I have a high school diploma. I have a college degree. I took my pre-law 3 years at USC. Then I went 4 years to Hastings School of Law. I've had 7 years of schooling on law. 7 years. You can't learn this stuff overnight. Trust law is very complex. So is tax law. Nobody's even bringing this stuff up in court because they don't read anything. I went in there in 5 minutes and pulled all this stuff out about taxes and why they can't foreclose on your property. But they're doing it anyway because nobody's bringing this up in court.
Well, people are trying. Here's another question.
It's not a matter of trying. It's a matter of doing it. But you got to know the law before you can do anything. It's like trying to go into a ring and fight without knowing how to fight. You're going to get knocked out.
It's very difficult to go into court on any issue and have the judge be silent as hell when you ask for stuff and still level the judgment against you.
You're talking in generalities.
But it doesn't matter what the situation is. They're there to collect the taxes from you, even though they're not qualified tax collectors, even though they're not qualified heirs to speak of, even though they're violating 856 all over the place.
Now you keep talking about generalities, then you start going into specifics. Well, 856 applies to real estate investment trust.
And you said every court situation is a real estate investment trust because they all have a pooling and servicing agreement.
Yes, and you have to know how to do that.
That's talking in circles and confusing our listeners.
I'm not talking in circles.
Well, that's what the questions are coming about. That's why people are asking these questions.
Well, what is the question? You still haven't asked the question. You're making statements, not asking questions.
Well,
what is your question?
Isn't the 1040B closing your accounting for the year, telling them you are not going to submit any more issues?
No.
That's a no.
N-O. What does it say on the form? You guys are not reading these forms.
Okay, so is it better for people to do the 706 or to do and 709?
You're talking about two different issues.
I'm just reading the questions.
Well, 1 minute you're talking about doing 1040Bs, and now you jump over and start talking about 709s.
I'm just I have a question here.
They're two separate issues. 709s have nothing to do with 1040Bs.
I understand that. The person.
But then why are you bringing up why are you talking about 1040Bs and then jumping over to a 709?
You're not listening to the question. The person said.
You're not asking questions. You're making statements.
Listen, the person said, which is better? If I've got a situation in a courtroom or I got a foreclosure, or I got all these issues out there, it doesn't matter which one I have one of them. Is it better to do the 706, 709 format, or is it better to do the 0-year account 1099, 1040B, the OID format?
The 706, 709 has nothing to do with, you're talking about paying taxes, filing a return. That doesn't have anything to do with being in court.
Okay, so there's the answer, folks. The OID process with the 1040V, the OID, the 1096, and the other forms listed in the 0-year account is for courtroom settings.
If you read the instruction booklet and nobody reads anything, go read the instruction booklet on the 1099C and the 1099A. The court has to file the documents. It says that in it. You want to go in there? You want me to show you?
The court has to file the 1099C or the 1099A?
Yeah, ask them if they filed the 1099C and the 1099A because they're required by taxing statutes to do it.
Okay.
That's one of the things I put into the letter rogatory when I filed the letter rogatory.
Okay, we have someone that's asking about an IRS claim.
What's the question?
What about an IRS claim?
What is an IRS claim?
Frivolous filing, and they put on $200,000 in fines.
Why did you get a frivolous filing? What did you file?
A 1099 OID.
Did you file a 8281 with it?
Didn't know about the 8281. So
How
now what do I do? Do I go back and submit the 8281 to pull my butt out of the hot water?
Why are you filing 1099 OIDs without filing the 8281? Go read the instruction booklet, 1212. I'm going to show you something. Okay, first I'm going to show you this. You guys are not reading.
We're going over time, too, so we're about out of time for tonight, Gene.
Okay, what does this say? I want you to read this.
Which one?
This is an instruction booklet for a 1099C and a 1099A. It says, who must file?
File Form 1099-C if you are a financial institution described in Section 581.
What does this say down here under C?
A court or court administrative office. Wow, that's pretty cool.
How come they haven't filed it? How come you're not making them file it? And I'm going to settle this once and for all. You guys want to go out. That's why you're getting in trouble, because you don't read anything before you do. You got to find out what you're doing before you do it, not after you do it. You want to go out there and just fling paperwork, and then when you get into trouble, then you want to know how to get bailed out.
Well, no, they rely on information, on people that do seminars trying to learn, and they didn't.
Well, these people out there, I don't listen to anybody because none of them know what they're doing. They don't, you show me one person that can tell you what an 8281 is. probably ought to go over this next week.
There's a lot of questions.
You can't cover everything in one class. You have to learn this.
We haven't got to. We have not got to a lot of the questions tonight. We've been trying to bring this down and bring it full circle so that we can. This is the reason we have a lot of people asking how long are these classes going to go, and like Jean says, we can't get all this information in our head. It just takes time. And for some of the people that are in the hot water right now, we've learned a few key things to ask for, to put into a discovery request to the judge to make the court provide you with the 1099A and the 1099C and the bonds that the attorneys must have in order to be and their firms have to be registered, and the attorneys have to be a qualified collector. They have to have a bond that they have to do, and that's the sections that we went over tonight.
Okay, here it is. This is the new form, so it's on a different page. I want you to read this.
Read what?
What does that say?
Where am I reading? Instructions for issuers of OID debt instruments.
Yeah, what does that say?
In general, issuers of publicly offered OID debt instruments must, within 30 days...
What does that say? Read that again.
They must, within 30 days after the issue date, report information about the instruments to the IRS on Form 8281.
Now, where do I get 8281?
Right there.
This is an IRS publication telling you what you must do. It's mandatory that you file an 8281.
Okay, the information return for publicly offered original issue discount instruments. See the form instructions for more information. Issuers should report errors in and omissions from the list in writing at the following address. IRS OID Publication Project.
There's where you learn how to do it. That's where you
send it. We have a screenshot of that. REMIC and CDO information reporting requirements. Brokers and other middlemen must follow special information reporting requirements for real estate mortgage investments. Go down a little bit. Down, 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 down. Okay.
You see it now?
Okay. For real estate mortgage investment conduits, REMIC, R-E-M-I-C, regular and collateralized debt obligations, CDO interest. The rules are explained in publication 93B, real estate mortgage investment conduits, reporting information and other collateralized debt obligations.
So what publication should you be reading? This is telling you what you should be reading.
The 93B and the 8281.
You can download these off the IRS website.
Okay.
9338.
Okay.
Publication 550.
The REMICs and CDOs should see Chapter 1 of Publication 550 for information on REMICs and CDOs. Okay.
That's what you're dealing with. You're dealing with real estate investment trust.
And
you need to know tax law before you can. This is why everybody gets into problems. They go out there and they start filing documents before they know what they're doing, and they get into trouble. Then they want somebody to bail them out.
Okay, so we've gone way over tonight, Gene. We're at 8:17 almost.
Okay.
So with that little tidbit, folks, we are finished for tonight. We will pick this up next week. And thank you for your questions. Those that didn't get answered, remember your questions and write them down. We'll try to get to them next week. This is what makes this information so integral and important, but at the same time complicated. and complex. And so
It's
it will
not
take us,
complicated once you understand how to do it and do it correctly.
and it will take us a time in order for people to truly understand correctly so that it becomes uncomplicated and non-complex to us. With that, Gina, I'd like to say thank you to all of our listeners. We really appreciate and are very grateful for all of your participation. Closing words, Gene.
I love you all. Remember, if you're going to use a money order or a check, send it to me. Don't send it to Maria. You're delaying registration and the getting registered and for the classes by doing that. So don't do it.
Oh, my phone just went off in the other room.
So
All
we'll
right,
see you
guys.
all next
Thank
week.
you. We'll see you all next week. I'm going to stop the recording.